quick update. It's been a week. I took a week off to calm down from the various last week of handling a lot of the Ethereum development calls when it came to the EIP 1559 and 3368. And just to kind of gather thoughts and identify, what's the next path? How's things look when we talk how proof of stakes transition is going to work, and what is there that's needed, what are the gaps on the merge, that kind of thing. So spent the last week researching, understanding, and seeing what the gaps are with that. And I will have a video this weekend, and then we'll talk merge. We'll talk both sides of ETH1 and ETH2's gaps, and what the schedule it currently looks like on that. So we will I think I'll have some good content for you guys that are coming right from the Discord, right from the various calls that are related to that. So you definitely want to follow and stay for that content. I think it's I'm going to give a good light, I think, to what is needed, and then ask a lot of questions that I think are concerning me on their flash to bang that they're trying to get on this merge, and the impacts that that's going to have on the ecosystem at large. But that is not what today's video is about. We're going to be covering a few other quick things. ETH to the moon. Hunt 8 says no POS. Yeah, we're going to talk about that real quick, because I think that's a key bullish sentiment of what's going on, and just the realities in the proof of work mining space that people dismiss in general when it comes to proof of work mining for the long term, especially when it comes to GPU spec mining and what the future brings in GPU spec mining. That it's still going to be here. People are still going to be mining after Ethereum moves to proof of stake, whenever that happens. There's things to mine and networks to uphold, and innovation coming to all those networks on top of that. So it is a very horizontal growth, not just vertically with Ethereum. There's a lot of other developments out there. So folks that are just catching the stream here, it's going to be a pretty quick stream. I'm going to try to keep it less than a half hour and consumable by folks that catch it after. That way they don't have to catch through a 1 hour full episode. And then this weekend I plan on streaming a few more times and have an actual produced video that's almost done on the general sentiment about crypto in general. Like, we had a pretty nice pullback yesterday, and now we're starting to see some more come back up. Just overall, just mining in general, both Bitcoin, Ethereum, and other coins, video that I've kind of covered as just like a 5-minute overview on that'll get released. But then a couple more live streams. People have been really receptive and reaching out about not having anything in the last week and wondering what's going on. So I wanted to make sure that we had a good video. I'm doing well. I needed the break, and whenever I get concerned in something, I usually try to research what I'm concerned about. So the last week I've done a lot of reading in the Discord from the R&D side for ETH 2.0 to understand where they're at, where's the ETH1 team at when it comes to the tech stack, and what does the merge kind of look like. And there's been a couple calls since last week on the teams trying to understand where the long pole is on this kind of stuff. And from that, it gives me a little more clarity of estimation of timeline, what the time is going to take for them to get there. Bottom line, and I think this is a good segue into the main discussion today, which is Hunt 8's $30 million purchase of, or at least order of nVidia GPUs. And mind you, orders versus purchasing can sometimes be a little we don't know the terms of it. So like the fact that Hunt 8 put an order out there, what are their terms of cancellation, right? So if this isn't supposed to be coming until July, so I will first predicate that with We don't know the terms of the order. And while they did place, quote unquote, an order for 60% of the newest NVIDIA GPUs, and we don't know if those are the Ampere ones that are 210 plus mega hash, or if these are the 60s or 90s. Hopefully we'll get some more clarity of what's the makeup of that order, because then that'll allow us to better understand. We do know that they claim that it's about 1.6 terahash worth of compute power, which is quite a bit. If these are the latest RTX line, 1.6 terahash Ethereum translating over to something like PoW would be like about 680 to 720 gigahash of PoWs, to give you an idea. So it's almost a terahash, a little under a terahash of power for PoW. For something like, I'll have to look at the conversions, but like that's a 1-to-1, 1.6 terahash to like something like ETC. It's 1.6 terahash to something like Ubik. I think Conflux, it's Conflux is the one that's about, like, if something's 100 mega hash on ETH, it's 77 mega hash on Conflux. So it's about a 30% drop there. So you're looking at about 1 terahash, 1.1 terahash on these other networks. So if you look at that purchase, anything that large is not looking at a 1-year deal. They're not looking at just the immediate term. They're looking at the long term. And if we understand the ecosystem is moving in its fastest way possible to get to proof of stake, and let's say that timeline is no longer than 1 year from today, then that $30 million purchase at its current 1.6 terahash at current difficulty, which difficulty will go up by and large if with that much more terahash on there. Not a ton. I mean, we're talking 416 terahash or 446 terahash right now is on Ethereum's network. This is like less than 1% increase to that. So it's not like it's a big needle mover when it comes to the amount of terahash that's on Ethereum's network. But let's say difficulty stays around the same for whatever reason. That's about 221 days to ROI that on the current, on $30 million with 1.6 terahash, assuming a 200 to 230 watt power rating per GPU. And when you talk about how many GPUs that is, I mean, we can do some back in the neck and work, but it's about 18,000 GPUs. So 18,000 GPUs, a lot of GPUs at 230 watts, 200 watts a piece. You're talking about 4 million watts of power. You're talking like a lot of money. So the generation of that right now, just top of the noggin math, is about $135,000 a day in Ethereum. It's about 77 Ethereum a day generation. So Ethereum at $1,700, they could be speculating on a few things. One, you don't make a purchase like that for 1 year, but part of the grounds are what's the current profitability, what's the current ETH price. They would be about 200 days ROI on it at current prices. If Ethereum's prices go up, and they're speculating the fact that they would have a large amount of hash power and that they could get a price increase because of 1559, which is the speculation that there'll be less ETH moving around. And let's say ETH price goes to $3,000 per ETH, the time that they would gain, get those machines online, which based on the article says that it would be there by summer, it'll be really coinciding. So they're not going to be able to kind of ramp up and get a lot of ETH ahead of the 1559 implementation if it does go in London in mid-July. Assuming there's no slips of London predicated on the testing, and let's say London goes off at the end of July, there could be like a 30-day window where this hash comes online and they're able to extract some ETH value before there's an issue. So I would say, by and large, this is a bullish trend, first off, to show that there is an investment of such sorts. I mean, their viewpoint is extending past Ethereum. It has to extend past Ethereum. So I see some people saying, well, they're not buying this to spec mine and general proof of work. When you buy a GPU, while you look what the most profitable thing is, everybody I know and I've talked to, like, they, of course, we're mining ETH in some capacity, but it is far more larger than ETH. And that's the main thing with like proof of work miners on GPUs, is it's more than just a single coin. We know the diversity. That's the whole point of having miners that have multiple algorithms on them. So them understanding that it's more than just ETH is an actual thing. Like, they're going to see a network extraction of value from those other networks when they're, in the fact that they can force deploy that much terahash on something like, let's say, Raven. That is like up to almost 10% of the network if the network's setting at 7 terahash. Right now it's about 10, almost 11 terahash. So you're talking about 7% of something like Ravencoin's network is that much hash power. So that's a pretty good force projection right now that they'll have on that. But I wanted to have a quick video with you guys to say, from the bullish sentiment of that's a big, bold statement from a large farm coming out and saying that they're putting that kind of investment in there, and it shows that they're either long term and out, that Ethereum is going to take longer than a year on getting proof of stake deployed, which we'll have a whole other proof of stake video. For the past week, I've spent researching and listening and trying to learn and understand the gaps on proof of stake, where it is right now from an ETH standpoint, not just on a technical integration standpoint, but on a decision making, which I think is going to play a vital role moving forward as people start to understand what a lean version of a merge looks like. Right now, as it stands, based on the words that have been said, is the ETH proof of stake, if it goes in with the leanest version, is going to have a no withdrawal option very first, because them just moving the consensus algorithm over, that's the leanest, most easiest way to do it. But the withdrawal requires updates to the EVM, so it's like a larger update to have the merge happen with withdrawal. I have all kinds of concerns about that for all kinds of reasons. If you have about $30 million right now in the ecosystem getting moved around with proof of work every day, and if you cut that completely off, so that means like $30 million every day is happening because of proof of work, from an inflation standpoint, not including, that being sometimes a lot higher because other fees getting moved around. That stuff isn't all getting sold based on, the assumptions of people saying that miners just immediately sell all their ETH. Some miners may do that, but a lot of miners, including us, take a small portion of that at a monthly level of sell to cover some expenses. But most of it gets redeployed in some way. It's either deployed as interest bearing on something like BlockFi. It's deployed, which helps on a liquidity side for borrowers. Some of it gets deployed to DeFi solutions. So some of the liquidity that is being provided on DeFi happens to that. Miners do a lot of different things with their ETH. Some of them just set and hodl. So if you have that loss of volume, which is what would happen on a lean deployment of proof of stake, where you're gonna have the inflation still happening. You'll have the fee side of the MEV technically happening, but it happens a lot different than what happens on proof of work, where proof of work, the MEV is being extracted by the pools, and then some miners get to that are participating in that pool get to share in, like, let's say Ethermine's version of that, where 80% is now going to go back to the miners. On a proof of stake, there's a randomizer essentially as part of the random engine. There is to select a block producer, at a random rate. And the basics of understanding right now is that if it's set up, they would get the fee plus the inflation. Everybody shares the inflation side, but like an individual validator would get the extraction. So there's a lot to talk about in this. I want to unwrap the discussion with an ETH 2.0 person. So I've been reaching out to various people that are in the ETH2 community. I want to have that discussion because the value proposition changes a lot. So like as an independent validator, if you are selected to be a block producer, in a world of high fees, there is a high probability that you would get all of that. So it'd be like you're mining a solo block. So you get all of the fees plus your distributed amount of validation, normal inflation fee, which is way, way lower. Like, to give you guys an idea, to current, if you're a validator since December, you have earned essentially 0.5 ETH since December. And let's say you were cloud hosting your node, you probably have about $30 of expenses per month right now to cloud host a node per month. So about $30, and it's been now we're going on the 4th month. So you've spent $120, $130, maybe up to $160 in cloud hosting. You've received 0.5 of an ETH, so the ratio has been pretty decent. But if you're a block, if you get selected through the random action of the way that the system works, you would have a potential chance of getting 2 to 3 ETH in a minimum set as your reward. That's a huge proposition. But when you look at the amount of validators versus the amount of blocks, and there's nothing that I can find that is guaranteeing that you would ever get selected. It's just you're part of a pool that could get selected as the block producer. It's a very interesting proposition to where you could have several conglomerates trying to get as many nodes as possible. And based on Vitalik's latest post, that there looks like there's going to be a hard limit on the total amount of validators. So the hard limit looked like about 500,000 total validators as a ETH 2.0. Now, I don't know if that's the final spec. That's just a spec that's been uploaded, but it starts to create a very interesting dynamic when you start to think about value extraction, especially on the fee side on the validators. But we'll have that as a separate video. I want to have that with somebody that's on the ETH2 community that can explain it in a lot better way than my just basic interpretation of that, of reading the specifications and going through, the design spec to try to understand. And this is really for you guys as miners. How does it look during a transition and what's going to happen with that? I think that's going to be a valid point that we need to cover since we are a participant in the space right now. So I want to make sure I cover that, and I want to cover that in the most detailed way possible that doesn't bore you. That's just taking the spec and then spelling it out. So there's a lot to uncover on that. But anyways, long story short, quick video. This Hunt 8, and I'm gonna take some questions too. I always like doing questions as part of this. Make you guys, this is a community. You guys should be able to ask stuff, and I can respond to it. I wanted to keep this tight at a half hour. We're at 17 minutes in, but if you have some questions, start asking them, and I'll see that. But for the folks that have been sending me private messages and stuff and seeing how things have been going, things are going fine. I've been super busy with the house stuff. It's getting to be spring. We're having to do a lot of stuff around here. So I've been kind of focused on that. And then I've been reading a lot of specifications when it comes to what the transition is going to look like, for I can bring you guys good informative understanding on how that's going to work. So, what is going on, my dudes? Throw some questions out here. And I haven't talked to you guys in a week. I do have some other questions that have came up directly. A lot of people are asking questions around the 6800 series, 6900 and 6800 XT series when it comes to configuration and some of the settings. I know some people are having troubles and problems with the 6000 series when it comes to the risers not displaying anything out. If you plug them into the board, I think I have a couple fixes around that. I want to replicate that issue for you guys on a stream to show you guys how to kind of fix that. There's some issues that seems to be with riser cards and the PCIe 4th gen on the 6800 series. So if you have a rig, the way I've seen to get around a lot of that is you have your onboard video controlling the video, because there is some display issues with some of the 6800 series mining rigs for people that have had questions on that. Those bits be really tripping. So as somebody who just bought a 3070 at MSRP and have their first rig running 1080 Ti's and 2080 Ti's, do you think there's enough runway until 1559 to get ROI on a 3070? Well, remember, it's not a matter of 1559 happens in July and then the world ends. part of the calculation steps that I was trying to ensure to people is that if there was a situation where the price really started to drop and then the reward fees were cut, or the fees were cut so deeply because of the burn, because there's only like theoretical MEV extraction numbers of what the totality of what's going to get burned and what's going to be still included post 1559. We're in like a theory land. So like if half of the reward or half of the fees right now get cut and burned, there's going to be a monetary effect on that to a participant. But we don't know what's going to happen with price. So to get your ROI, like currently, if everything stays well and ETH goes up, you should have no problem getting your ROI. If the price comes down though, and then the fees are cut in half, it's going to really extend that. But again, we're still looking at probably a January to a March timeframe on POS on its simple, the most leanest version of that, just because of the amount of time that's going to have to be involved. And we'll get into that in more detail with folks that are hopefully will be happy to join to help educate people on what is all involved in the merge. I'm not going to just try to reciprocate, take the information and try to bring it to you. I'm going to try to bring on some people that are familiar with it, and I'll try to guide the conversation before it gets straight to the points and doesn't belabor on something you guys don't care about. We'll try to make it as lean interview as possible to get straight to the points. Reading through some of your guys' comments. 30 million in GPUs. Damn, that's like 10, 5,700 XTs. Yeah, I would assume that their cost factoring is probably about, if you do the math on 18,000 GPUs, you could get a price per cost there. So somebody do some quick math for us. 18,000 GPUs divided by $30 million. That should give you the relative price on them. And I'm doing the 18 million GPUs based on 89 mega hash, making up the 1.6 terahash. So that's getting the 18,000 GPUs at 89 mega hash gets you to about 1.6 terahash. So if we're talking 18,000 GPUs divided by 30 million, that should give you a relative price per unit. GPU shortage, unless you have a mining, you're mining Ethereum. Oh, wait. Let's see here. Oh, wait, Juan, thank you, sir, for that $5 super chat. What will you be mining after ETH since you have so many GPUs? So we're already mining some other stuff. So we have a few rigs on Ubik. We have a few rigs on VTC that I want to have a video for you guys. And then we have about 7 gigahash on Ravencoin right now. And then there's about 23 gigahash right now on Ethereum. So that's where the mining farm is right now. There you go. There's the 1666. Well, so $1,700 each is probably a mix between the Amperes and the HX60s, or the HX90s, which is equivalent to the a very expensive 3080, or mix between 3080 and 3090. Serpent's asking, I hope you got some rest. I did get some rest, my dude. Do you think the P102-ish is 52 mega hash? What do you think? What hash do you think of P102? Yeah, I think it's about 52, but it goes up a little higher with the 102s, I believe, work with the pill. Michael Walker says they're actually buying all those GPUs so they can run Cyberpunk and HD. Why do you think the investors are so bearish in Hunt, considering the positive earnings report and their recent GPU purchases? I think they're just weighing in to the known state that Ethereum is the proverbial cash cow right now, and they're wondering why, with their intention to move to proof of stake so elevated, that somebody would risk it. And like I said, these things are, they are basing on the known situation, but also going long on proof of stake, or going long on proof of work. It's more than just Ethereum in the long run. HX30 is 460 each. So the HX30 or the 30HX, which is equivalent to a 1660 Ti, is super overpriced right now. I hope we get a specification of what their makeup is. I mean, that would be really interesting to hear or see if those are the new Ampere mining editions that get about 210 megahash each, because that's quite a bit of. I mean, that's about $1,700 a GPU. That's still pretty high, but think about $1,700 GPU right now is a 3090 that gets about 125 megahash. So if they're spending $1,700 for 210, they're getting a better deal, and that's going to be lower wattage, most likely around 250 watts, not 320. What do you think about Intel's new 11700K CPU using for mining? I haven't seen the 11700 or the 11th gen mining Monero, but when you talk XMR and you talk RandomX GPUs or RandomX algorithm, I haven't seen Intel's been getting its butt kicked by the amount of cores that AMD puts out with like its pretty much all of its CPUs. 3K for 21 for the 210 mega hash. That was the estimation, but if they're buying $30 million, they might be getting a better deal. Bro, Kyle, thanks. No problem, my dude. And I'm gonna keep going, man. Like there's a lot more to talk about, and still be a voice in that space. I mean, there's a lot going on in the behind the scenes, and I want to make sure that I can bring as much as that to you guys in like Zoom meetings and stuff like that with some of the participants that are developing like the future state of like proof of stake, and then maybe get some Ravencoin folks on here. If you guys would like that, I haven't really brought any other folks. It's always been a lot of the ETH stuff. Would you guys like to see like if I can get Tron, Leon, or a few of the other Ravencoin community people on? I still am going to do a Vertcoin one because it's been a long time. I haven't done a Vertcoin video in a long time. Robert Jacoby super chatted $5. Do you think it's still wise to build a 4-card based RVN miner? If you're buying those GPUs cheap, 4 gigs will last on Ravencoin for quite a long time. So it all comes back down to GPU price, and 4 gigs are some of the best pricing right now. And coins that are not memory hard and memory based, some of those 4 gig GPUs are a pretty good deal. I'm getting a lot of yeses. Yeah, I think Tron would join a call. I want to make sure that we talked about the future state of Raven. That's one thing I want to talk about is like what is as the development team, what does Tron and them need from the community? Is there a priority list? I know that there was some governance stuff they were talking about in some of the releases about how the new kind of autonomous organizational structures would work with Ravencoin, and with Tron now not being under Meta Ventures, like how does that work? And I'd like to have a genuine conversation with them, and then look at this future state. As one of the key developers in that ecosystem, I think we'd have a really good conversation. All right, guys, we're right at 29 minutes. I'm going to wrap it up here. This is a quick one, just 30 minutes for you guys. Maybe a video later on tonight. There was a few other things I wanted to try to get to edit. I also have a new, this laptop is getting moved downstream, and I got a new one coming in, the new Alienware. I think it's an 11th gen, but it's going to have the 3080 in it. So I'm getting a new laptop with the 3080 in it, and I want to do some testing with that for you guys. But that's going to be my new kind of setup. And I have the MacBook Pro, but I wanted something that was more, as we start to get back into traveling stuff, I wanted to have a latest tech stack when it came to that for some of the video editing. I don't really like editing on the Mac. I like the horsepower that the Alienwares provide laptop wise. I've looked at a few other ones, the Sager and stuff. I just, Alienware right now has the availabilities on the 3080s built into the laptop, 64 gigs of RAM, a 4 terabyte NVMe RAID 0 setup. I really wish they put like a Threadripper in it, but I think the power usage, I don't think they have a smaller version of that. And then the highest end Ryzen ones, by comparison to like the H900K processor, I still think right now that that's the best for the, it's a 10 core, 20 thread laptop processor. But that's going to be my mobile workstation when I'm out and traveling, because I'm going to be doing some traveling here in the next few months. So I want to be able to bring guys content and stuff, but we'll do a review on that too. And of course, I try some stuff on that, but 30 million GPU and EIP 1559. I will quit. Remember 1.6 terahash on 446 terahash is less than 1%. It's going to be barely a dent in the difficulty. So it is what it is. That gives you a perspective of how many GPUs and ASICs are out there. So I will catch you guys on the next one. We'll have a stream tomorrow. It's just going to dive a little more into the ETH merge discussion. So if you guys want to talk about that, we'll show up for that, and hopefully I can have an ETH 2.0 person in and we can start talking through that. But I want to go in a little more detail on that with you guys. And be sure to hit that like button. If there's 400 people in here, if you guys do that, that's what the algorithm, YouTube, we're all tied to the algorithm. So if you guys can hit that like button, that helps get this shared out to folks, and we'll have some more content coming up. All right, my dudes, I will catch you guys.